Hello, and welcome to the third episode of the Markets at a Glance. My name is Rufas Kamau, Markets Analyst at FX Pesa, and I'm going to be taking you through today's session. So, as you all know, on the Markets at a Glance session, we try to understand what's happening in the markets, what's moving the markets, and also concurrently try to understand what's important price levels that you can use in trading. So before I make any progress, I would like to make sure that I have the right connection. If you can hear me clearly, kindly type hi on the live comment section, and I'll be responding to this right away. All right. So hi Isaac, hi Kevin, hi Daisy. Thank you guys. Thank you for your responses. I think it's time we begin the session right away. So this week has been largely quiet. That is since yesterday on Monday. Nothing much happening in the markets except for the economic data. The economic data basically indicated some contraction, especially in the Eurozone and also in the UK. But also we had other major news affecting the markets. So one of them, early in the morning, on Monday morning, we saw the BOJ footprint, basically intervening to strengthen the yen against the dollar. And this caused some huge volatility in USD JPY currency pair. So besides these, we also had the parliamentary elections in the UK, and Rishi Sunak became the new prime minister, which was officially confirmed today. So in his speech, he basically mentioned that he is going to be very tough on stabilizing the economy. So a lot of participants and also citizens in the UK are very hopeful that Rishi Sunak will drive the economy in the right direction. So the current major big problem in the UK is the high inflation rate, and at the same time, energy bills are way too high. So those are two key things that he'll be looking to address going forward. So that being mentioned, most recently, that is in the last couple of hours, towards the New York Open, this is when we started seeing our first major movements in the markets since the beginning of the week yesterday. So if you focus on this particular chart, which is basically pound USD, you'll notice that it hasn't been moving much since the opening of the market yesterday. So opened with a gap towards the upper side, moved down and then up, and kept trading within this particular range. Bottomed here at around 1.12593. Today opened here, went high up and then up, down. So this was largely a sideways movement, save for the last 2 hours. So in the last 2 hours, we have seen the dollar index weaken, and all these other currencies have become very volatile. So you can see the sharp movement here, almost vertical, breaking this particular resistance and confirming that there is a possibility that now we are headed higher. So a lot of these particular currencies have been waiting for this for a long time to get a rally against the dollar. The dollar has been quite strong against other currencies in the last few weeks, and now it seems like the trend is reversing. So what we are seeing here on the pound USD is a major break of a major trend line. So we have this trend line that has been holding here. So you can see this particular high of this particular week, followed by last week's high, was forming a major resistance level here. And at the same time, if you look at the support levels, it was clear on the forward chart that the pound USD was trading a triangle. And this break confirms that now we are headed higher, since simple analysis will show you that the lows have been getting higher, and also the highs have been getting lower, but the new high, this movement will be expected to be higher than the previous high, indicating a bullish momentum. So this has a profound effect on other markets. So if you look at Euro USD, it was largely trading in a bearish channel. So you can see the consistency in this particular channel, and this has lasted a long time since the January of this year. So this is the first time that the Euro USD is breaking this upper trend line. So if you zoom in here and you look at the most recent price action, the current 4-hour candlestick seems to cruise through this particular resistance level. So remember, the candlestick has not yet closed, but if it closes above here, then this could be confirmation that the trend is now changing, where the most recent lows in the Euro USD over the last 4 weeks have been getting higher, and also we now start seeing higher highs compared to last week's high. So now it's very indicative of a major reversal in these particular markets, that is the major currency pairs. So if you look at the USD against the Swiss franc, similar thing is happening. So a major trend line here is also being broken by the current candlestick. So it's very clear. You don't have to try and rationalize it. It's already happening. The US dollar is now taking a step back. So one of the main reasons that this could be happening is, one, the very strong dollar is hurting a lot of economies, and the Fed, or the Federal Reserve Bank of the US, might decide to take a step back in terms of aggressiveness in the rate hikes. So in the last 3 sittings, the Federal Reserve Bank of the US has hiked interest rates by 75 basis points, and these have strengthened the dollar immensely against other currencies and also other assets, and these has caused a lot of stress in the markets. So now we are focusing on a potential step back by the dollar index, and these will basically allow these other currencies to strengthen. So looking at the dollar index quickly here, you can see that it was largely moving upwards. You can see the most recent here. And then a consolidation here where it was basically ranging, moving between trend lines. But now the sharp drop here indicates a continuation towards the lower side. In this case, implying that the dollar is taking a foot back or basically weakening for a while. So these might be the next leader or the next big factor influencing the markets, where the dollar weakness would be taken as positive for trading other currencies. So if you look at commodities, and in this case, I'm talking about gold, you notice that it had bottomed here. So these were a major resistance for gold, having seen the same low on September and now in October. So from here, you expect gold bounce strongly, which it did last week. However, since the opening of this week, you can see the sharp reversal here, sharp drop, and now in one candlestick, it has recovered this entire movement. So it basically indicates that we are now bullish for gold. We could see some further upside, perhaps towards the 1620, 1680 price level. So this particular high here might be very significant if gold manages to close through the current resistance level at around 1658. So you can already see the price levels here that were acting as support. This is the level right here. So it was acting as support previously. So now that the market is getting here, it's also acting as resistance. So if we manage to close through this level, then there is that potential that gold could close to another high, and this is basically based on the previous highs that gold was unable to break. So on the reverse side, if it fails to break that level, then this week's low might be very interesting as a target, where the market could, let's say, basically reverse the entire move. So silver is also doing the same thing. So if you look at the forward chart, a large number of swings here, upwards, downwards. And now there has been a lot of noise, especially in the last 1 week. You can see the upward, downwards, upward, down, to and fro. But now, seemingly, we are looking at a correlation between silver and gold. So in this case, potentially move higher. So then, if you look at the oil markets, and these ones are very interesting. So I'll be starting with the US oil. So US oil has been largely in a range or in a sideways momentum. And this is quite clear. It's not something that you have to do so much work to visualize. So clearly, since Friday last week, you compare with Monday and also today, then this range is quite clear, where the oil is finding resistance at 85.598 and also the bottom at around 82.776. So the most recent swing, which has seen assets vary against the dollar, has seen the oil markets hit this particular resistance. And as you can see, immediately after hitting the resistance, we have seen a rejection. Yes, the candlestick has not yet crossed, but it's clear this is a rejection of higher prices, and potentially we could see the prices reverse and move back towards the lower side of the range. However, if managed to break, then there's also another potential high here. These was 4 weeks ago, and at a price level of 86.9, then we could see the price level continue to rise and get to this particular level. So on these, we should know that earlier in the day, there was a speech from the Saudi energy minister, and he basically said that Saudi Arabia is the most secure, reliable supplier, and that they are engaged with many European governments regarding the current energy crisis. So basically, Saudi Arabia is setting itself up as a potential partner with the Eurozone to supply them with oil. So with the supply from Russia being cut off, especially as a result of the war in Ukraine, now Saudi Arabia is preparing to fill in the gap that was left by Russia. And today's speech basically confirms that. So people are depleting emergency stocks and using them to manipulate the market when their original purpose was to alleviate supply shortages. And this was a direct quote from the Saudi energy minister. So using emergency stocks may become painful in the months ahead. So this basically focusing on the US as one of the governments that have been drawing strategic oil reserves in order to supplement supply. So this has been happening for quite some time, and now the 4-hour prices. And then you zoom out, you notice the longer term. This has largely been pushing oil prices downwards. So just to visualize these, you can see the overall movement of oil has been bearish, basically indicating that oil has been moving back down. So this started all the way back in March when the US started tapping its US strategic oil reserves. So there was a pullback and then a further rally. But then since the high that we saw in May, oil has been consistently moving downwards. However, as you look at the current price levels, and the policy that the OPEC Plus countries are taking of cutting output by around 2 million barrels per day, then in this case, we expect that the oil prices will start moving upwards in the near future. However, there's one key fundamental that is critical to understand, and that is the US midterm elections. So the midterm elections are happening around 9th of November this year. So that's a couple of weeks, I think about 2 weeks from now. So before then, it's quite political, and we could see the Fed propping up the markets. So there's that potential that we could see lower oil prices and high equities. And this could be happening as soon as from today. So from today's rally, we could see investors are betting on this possibility. So the current rally that we are seeing is the dollar weakening, equities going up, and at the same time, oil prices are moving back down. So early in the morning, we can see oil was going down before this rally, but potentially we could see the prices push back down. So it's important to understand that equities could go on a bull run. So if you look at the setups, especially on the 4-hour chart, then you notice that for the S&P 500, we already had an inverted head and shoulder pattern. So in the last couple of weeks, we saw the market form the first shoulder, followed by a head a week later. And then last week, we had the other shoulder, completing the head and shoulder pattern. It's a little bit deviated. It's not the perfect inverted head and shoulder, but the idea is clean that here we had a resistance. The resistance was obeyed again. Here, the market did not quite get to the neckline, pulled back down and then up. So early in the morning, I remember sharing these. I think I did this on Twitter. This particular resistance was holding quite well, basically indicating that if the market breaks this level, then it's confirmation of a reversal. And with the confirmation of a reversal, now we expect a rally in the S&P 500, especially as we approach the midterm elections. So this would be the continued theme for the rest of the week, where the US indices or equities continue rising against the dollar up until the election. And then from there, we'll see a way forward. So besides focusing on the US 500, if you look at the Dow Jones and the NASDAQ, I'll try and get to that. clear as possible. Okay, I don't have that chart open. So let's do this. We go to we're just trying to load the chart quickly here. So that should be the US 30. And also the US Tech 100. So as you can see, also another very strong run for the US 30 or the Dow Jones Index. This week, that week I was going up. Last week continued momentum, and this week also continued momentum, basically indicating that this particular momentum could continue. So for the Dow Jones, it was more or less a double bottom kind of reversal pattern. So for all those who are conversant with this particular pattern, the market basically forms a W-shaped pattern. In this case, this is the first swing of the W. Then the second side of the W pattern. So we got to this, that pullback and then broke. So the breaking point didn't happen today, happened last week. Market pullback and now seems to be in a continuation. So after the formation, the bottoming pattern here, that is the double bottom, you can see the far acceleration happening here. So the bull market or the rally is expected to continue towards the previous high, potentially even hitting this high, and this is around 32,615. So beside this, if you look at the US Tech, this is the NASDAQ 100. This one seems to be the slowest. Remember, the sell-off in the equities market was highest in the tech sector. So a lot of technology companies are the most hit by the bear market. So here you can see another similar pattern, which basically seems like an inverted head and shoulder. That being the first shoulder. This is the head. So quite a similar pattern, seems correlated with S&P 500. So this did not quite get to the neckline, pulls back down, and now you can see the completion of the pattern is what we're expecting to be happening today. So a nice target for the US Tech 100 is around 11,713. So the shorter time frame, you can already see from H1 that this is a real possibility that the pattern could be completed in the next 1 hour or even more. So just a very small gap to close here, and the pattern is completed. Then from here, if there's a break, then potentially the market could continue moving upwards. So remember, this is a very quick session. So if you have any questions, feel free to raise them, and I'll be responding to them right away. So I see a lot of responses here. Hi, Matt. Hi, Nelson, Primas, Garang. We met the other day at the Pips and Branch event in Nairobi. Thank you for attending. Hello, Bernard, Charles, Godwill, and can't read this name. This is our vlogs and fitness, and also Peter. So there's a good question here. Hi, Rufas. Account opening has got me stuck. I wonder why. I'll be sharing a link open quickly. So if this doesn't work, feel free to inbox me on Twitter, and I'll be responding to you right away. So my handle is Rufas K. That's it. So thank you very much, guys. Thank you for your time. If you have any question, feel free to raise the question, and I'll be responding to the question right away. So just a correction, the US midterm elections are on 8th November, not 9th, as I had mentioned. So the confusion could be with the prior elections that we had with Kenya, which was on 9th. So that's it for today. Enjoy the bull run. Hopefully you get to make a lot of pips from the movements we are currently experiencing in the markets. So as for crypto CFDs, I'm expecting a quick bull run, also come accompanied with the S&P 500 movement. So also with Bitcoin, I expect some strong momentum. So from what I'm seeing here, remember Bitcoin has been ranging. It has been sideways, so we don't have those crazy breakouts that we have been seeing in other markets. So clearly, you can see the range and how it has been happening. So with a high of somewhere around 20,156 and a bottom of around 18,117, then there has been some major swings happening in Bitcoin. So currently, we are coming from the lower side of the swing, and the dollar is weak. So potentially, Bitcoin rally all the way up to 20,456. So from the 1 hour chart, you can see that the market opened with a gap yesterday, closed the gap, and then prayed sideways. So if you go to a smaller time frame, these are 15 minutes time frame, then here it's quite clear that the market was trading in a triangle. Then the triangle was broken 2 hours earlier, and now we expect some further momentum pushing Bitcoin towards the higher side. So a nice target would be yesterday's high. Yesterday's high was around 19,692, and if that high is broken, then potentially the Bitcoin price rallies towards the previous high, and this at a price is a price level somewhere around 20,456. So thank you very much, guys. Thank you for your time. I hope to see you on the next session. Remember, the next session is on Thursday. This is when we'll be having a roundtable panel. We will be focusing on the key price level happening in the markets, the major news affecting the markets. So in this one, we try to go deeper into the markets, understand the major trends, the major news. So it's longer, it's 1 hour in duration. So it should be happening on Thursday at exactly 4 p.m. So make sure to join. The only way you do this is go to the FX Pesa channel, click on the upcoming sessions, and then set a reminder that you can attend once the session is on. Thank you very much, guys. See you on the next one.